Hello everyone, hope you're doing well. Welcome to another episode of Altcoin Thursdays, the most successful crypto Pico top show in YouTube history. Thank you for your support on the channel. If you tune into these videos, yes, have hesitated to leave a like and subscribe. We're almost at 50k subs, so getting us over that line would be much appreciated. So the market hasn't moved much. Maybe it will now because it's Thursday. You can see the watch list is a bit red, but more importantly, it is Altcoin Thursdays, the best sell signal on the planet, apparently. Not a lot has happened from the charts we discussed last week. Stuff has mostly been choppy, drifty, no real breakouts. I mean, looking at BTC this week so far, inside week, on the daily time frame, it's still stuck within the range we outlined in the last Monday Markets video. Very much still there, found resistance at the range high again, so nothing really to write home about. I thought I should take this opportunity to do some trading education stuff that specifically pertains to altcoins. As the title suggests, we're going to be talking about how to trade trending altcoins. Specifically for levels traders, these tend to pose an issue because if you trade levels and there are no levels, that would suggest that there's no trade for you. But as we know with altcoins, a lot of the time, especially if we're in sort of peak bull market or even sort of aggressive bull market, where most of the money is made, realistically speaking, if you're a pure levels trader and you have, for example, like the last daily resistance, and then the altcoin breaks out that resistance, and then you're thinking, okay, well, if it comes back to the level, I'll buy a retest, but what it does instead is just do this, right? And if you're sat on the sidelines, especially on the daily or weekly time frame, looking for an orderly pullback or something very technical, a lot of the time you simply don't get it. And the chart on the higher time frame just looks like this. You have a big breakout, and then the rally's over. That looks like 3/4 of a dick. In any case, you need to find a way to trade the trending altcoins because the opportunity is just too good. And a lot of the time, if you just sit there waiting for your higher time frame support resistance retest levels, the trends are just too quick, too aggressive to allow you for that type of entry. And by the time you do get that type of entry, it's usually on the backside of the bull market, and those aren't levels you want to be buying on the way down. So the question is, when altcoins move like this on the higher time frames, how do we catch a portion of that move or get positioned in the absence of higher time frame retest, support resistance, all the bread and butter stuff that we're used to, especially when trading Bitcoin and ETH? And I think I have some useful answers. And they are as follows. So if we just quickly transplant this, right, make it a less offensive color, bit bigger, not that big, that's what she said. So, okay, a few solutions to consider. Now, these aren't mutually exclusive, so you can get one or more of these at the same time, but these are some useful ways to think about trading those types of altcoins when they are in what I like to call a lockout trend, where from the higher time frames, you're just not getting an entry if you want something clear and textbook. So there are 5 points I want to make here. The first is rather straightforward and goes back to the boomer days of trading crypto, when we didn't really have linear futures to the same extent, or alt USD pairs weren't as popular, and the bulk of the altcoin trading volume was done in the Bitcoin pair. So if you want to trade Litecoin, you weren't trading Litecoin dollar. That wasn't the most voluminous pair either. You were trading LTC, BTC on like Bittrex, Poloniex, and so on and so forth. This is still a valuable tool. You'll see Don use it to great success, and in general, it gives you a good indication of when to rotate. So if you don't have levels on the Alt USD pair that you're trying to trade, there's a good chance you will still get some levels in the Alt BTC pair, or as we've seen increasingly, depending on the sector, the Alt ETH pair. So this is just a very simple solution that in the absence of clear high time frame levels in the USD pair that you're trading, try the BTC and ETH pair, and you'll discover a lot of the time those levels are very good, actionable, and they simply work. So quick sort of bypass, if you will, to that issue. Yes, the level that you're trading the chart that you're trading may not have super clear levels, but there's a decent chance that the BTC and ETH pair does, so pay attention there. The second point I'll make is use BTC USD and or ETH USD to time entries on correlated pullbacks. As we know, generally speaking, the market tends to be very correlated positively. So, if Bitcoin and ETH are going up, you'll have altcoins generally going up more. And if Bitcoin and ETH are going down, you'll have altcoins going down more. There are obviously exceptions to this and nuances with regard to crossing certain volatility thresholds and all that type of stuff. But I think as a principle, that's something that still works in altcoin markets. So applying this framework, again, rather straightforward. If an altcoin is just mega mooning and isn't letting you in at all, and doesn't have any levels that may indicate resistance and just simply isn't giving you enough information within the parameters of a levels-based trading system, what likely does have levels and can give you those indications are the Bitcoin and ETH charts. So what you do instead is say, let's say I want to buy shitcoin X, but that doesn't give me any good chart-based entries. I'm instead going to look at BTC and ETH, and when those pull back and I have support levels for those, I will buy shitcoin X on the assumption that if they go down to support, shitcoin X will dip. And then if I'm right about the market bouncing as a whole from support, and I'm going to use Bitcoin and ETH to find that support, shitcoin X, because of the aforementioned correlation, will also bounce. So in that way, again, you circumvent the need to have particularly good trading levels on shitcoin X. Also, please don't go buy shitcoin X on Uniswap or shitcoin Inu or something. This is just a theoretical altcoin for demonstrative purposes. But in any case, that's kind of how you do it. You basically concede that you're not going to get particularly good or useful trading levels from whatever altcoin, but you can still time the market using BTC and ETH given the existing correlations in the market. So you simply make a bet as to where you think Bitcoin and ETH are going to bounce and reverse, and you express that view on the altcoin that you want to buy, even if it looks like you're sort of buying in the middle of nowhere for that specific altcoin. Those correlations are what really pull through. You're buying BTC and ETH support, and your bet is that the correlation, well, first of all, that you're right, but that the correlation will mean that you finally get an entry, and a good one at that, on the altcoin that isn't giving you any clarity otherwise. The third solution here, and again, I will make longer videos probably on the Cred channel about all of these points. Somewhere in my Cred content folder, there is an altcoin trading one, but I just want to give you guys some of the insights ahead of time. Point number 3 is use much lower time frame ranges and consolidations. Again, this is essentially a concession that if we look on the higher time frame, it's just going to look like this, right? And you're not going to find any clear levels, pullbacks, structure, and so on and so forth. So in the absence of structure, you sort of find it by going on lower time frames. You have more candlesticks, more levels, some sort of range or something to work with. And you may just have to do that. I think the broader point to bear in mind here, the sort of overarching principle, is that when altcoins are just mega mooning in turbo price discovery, all very technical terms, and nobody has any idea what's cheap, what's expensive, especially when it comes to technicals. Basically, the entire market is scrambling for some sort of solution, some sort of anchor to be able to trade those altcoins. So while it may seem far-fetched that you're using ETH pairs and BTC pairs and using much lower timeframes than you ordinarily would, you have to realize that everyone is in the same boat. No one has any levels, there are no prior reference points, and we're essentially making it up as you go along. So we need, with that concession in mind, we have to use lower timeframes than we would ordinarily be comfortable with, use worse levels on those lower timeframes that we would ordinarily be comfortable with in order to just be able to trade the damn thing at the end of the day. And again, if the market is so strong, the importance of technicals and how clean the level has to be and so on and so forth also goes down. Like if there's just an indiscriminate passive bid in the market, you don't need to be a genius to try to catch a piece of it, right? You don't need the perfect level or particularly complex technicals. Everyone is in the same boat. And the natural drift of the market will take it up. And it's just about finding an entry. And one method to cajole an entry in those slightly unorthodox conditions is again to use much lower time frame ranges and consolidations. The simple observation that if you go on the lower time frames, you'll just have more candles, and from those candles you can derive smaller clusters, ranges, consolidations, whatever it may be. So while on the daily time frame or even on the weekly, it might look like the chart looks like this. If you then go down on the 15-minute, 15-minute, hourly, 4-hour, what have you, in between what looks like just one massive impulse, if you were to observe these areas on lower time frames, you're much more likely to have some sort of range, some sort of structure, some sort of consolidation to work with. And that's where you take out your standard price action trading kit, be it with clusters, ranges, support resistance, failed breaks, trend lines, all the stuff that you've hopefully passively picked up on the channel. And you simply just apply what you know on lower time frames. And yes, it's initially uncomfortable because if you're used to using a top-down approach from the monthly to the weekly to the daily and so on and so forth, you look at all these higher time frames and you might come to the conclusion that you're doing business in the middle of nowhere, but so is everyone else. So you might as well get something rather than nothing, and that something will come from the lower time frames. And then instead of just having a straight line up, straight line down, that straight line up looks slightly less straight and gives you some sort of structure on a sufficiently low time frame. So again, you need to get comfortable being uncomfortable, concede that we're all making it up, and I'd rather have some substandard structure than no structure at all, because again, it comes down to being able to formulate a set of trade parameters and define your risk. The higher time frames don't give you that, the lower time frames will, so get comfortable with those. In line with point number 3 is point number 4, which is using lower time frame moving averages. Levels don't move, they don't track price, moving averages do. So when it comes to those, you might just have to pick up a faster trend following basically tool or set of moving averages, be that a ribbon, a 1321, a 50, a 200 on the lower time frames, like 30-minute, hourly, 4-hour, so on and so forth, or even just, for God's sake, the Binance default moving averages, which a lot of participants trade when the market is particularly bullish. You simply use those as an anchor because you get some sort of structure that's actually trading closer to where price is. Because again, the levels don't move, the moving averages do. You're looking for something to base your trade on. And a lot of the time, the faster moving averages will do a decent job of keeping up with price, and you simply use those as your adjusted anchors. The exact moving average isn't that important, to be honest with you. I wouldn't go as far as sort of backtesting it and seeing what works and what doesn't. Again, the popular ones I mentioned in passing, 13, 21, 50, 100, 200, just on the usual time frames, 1 hour, 4 hour, that's probably got you covered, to be honest. If you have some higher time frame confluence there, that's great. If you don't, that's completely fine. Even the Binance moving average, the sort of standard ones, are probably good to go. And then you just transplant, again, your basic price action trading toolkit to those same moving averages, right? So for example, let's say this is what the price looks like, and then you have like a moving average tracking it. That's a bit close. But let's say you have a break which fails and then reclaims that same moving average. That then gives you your invalidation, and it's the same basic entry techniques of either a pullback or just consolidation or market entry, whatever, what have you, but at least you have something to anchor the trade. Because if you just look at the chart, there's nothing going on. You look to the left, there are no levels, it's a disaster, and you basically leave it and say, well, look, if it pulls back here, then I'll buy it, whatever, but that doesn't give you a trade now, right? If the thing is trending now, you want a piece of it as to, we're trading today's market, not last week's market. If you have a faster moving average, you have at least some sort of structure that's proximate to price to allow you to set up trade parameters in a way that's somewhat familiar. So again, if you're there wondering, why don't you give specific ones? I think the bog standard ones that I mentioned just on lower time frames is more than enough when we're dealing with that degree of, bull market fervor and also the uncertainty that comes with not having good technical trading levels. I don't know if I said trading levels or training levels, but I did mean trading levels. The last point is use the daily open strategy. This is something I will cover again on the Cred channel. I think that's going to be the next video if memory serves correctly. And also, just for those of you who get upset about not seeing chart examples, if I need to remind you of 2021, maybe it's more painful than beneficial. But I'm talking about stuff like, if we look at some of the best performers, the ones which didn't go to zero anyway, like Luna, if we look at Sol, I'm talking about these types of legs, where if you're looking for a high time frame retest, this is like 500 green weeks in a row. Same here, right? I'm talking about these phases in price action where if you're strictly high time frame oriented, weekly, daily, and so on, you're just not getting any bang for your buck. We can also, even BTC has examples of this, right? So the trending portions of the market, this to some extent. ETH obviously has the same type of behavior going on. This leg. For altcoins, if you go to Axie, I think that's a particularly egregious example of a lockout trend when you essentially get this type of price action. The dog coins had it as well, basically this entire period with a slightly generous consolidation in the middle. That's the type of price action I'm referring to. So, with that in mind, with the tools that we've covered, another one you can use is, as I mentioned, the daily open strategy. Now, what is the daily open strategy? Again, I'm bastardizing my own future video here, so if it doesn't make any sense, my apologies, and you'll have to just wait for that one. But essentially, when you have a very strong directional bias, be that as a result of trend or a break through a very large level or, just some other indication that, hey, this thing is going to move, it's going to move up and it's going to move a lot. It also works for moving down, but just for our purposes, let's take the bullish example. What you will have observed a lot of the time is going back to the first squiggle we drew where the market has a very clear bull bear line, inflection point, mega resistance. Above this, it's just going to teleport to 1,000,000, those types of levels that you're hopefully familiar with. And then the market will break that level, usually very impulsively. And then a lot of the time you're sat waiting for a retest, but instead it just keeps going. And those types of trades are very upsetting because technically your bias was bullish as soon as that level was broken. But because it didn't retest, there's a good chance, and this used to happen to me all the fucking time, that you just can't do anything about it. Oh, well, no retest, no trade, move on to the next. And I just realized that's not good enough because it lands you in a very uncomfortable position where the best and strongest moves are the ones that don't pull back, but would also be the ones that I missed by definition. So there just had to be a better way, and I think the daily open strategy is a good way of expressing that. So essentially, the context for it is when you have a very strong directional read on the market for the coming days and weeks, but are not expecting or don't get a higher time frame pullback, that would allow you to get positioned. Now, I will mention that the consolidations is a good way of dealing with it, and daily open strategy is just kind of, in the same toolbox. So what does it actually mean? So it works in the following way. If I can just add a level very quickly. So let's say this is our daily open, right? And you have a strong expectation of the market moving up for that day, the next day, and just for a prolonged period of time. What you can essentially do is when the daily candle closes and the new one opens, you mark out where that level is on the daily open. Okay, so that's step one. So let's actually do this as well. Hopefully this text is, I'm going to delete it, so pause if you want to screenshot it, I suppose. Daily, I've got my microphone in a very bad position. Hold on. Daily open for dummies. And again, we're using the bullish example here, right? 1 is map daily open. 2, wait for ideally strong drive below daily open. 3, wait for ideally strong reclaim of daily open. And that's kind of it, because your invalidation is the low of the day. Entry, usual shite. So be that a market order on a close above, or a retest, or some sort of consolidation after closing above, or whatever you use for acceptance. Thankfully, the Cred channel has a whole video on entry triggers, and it's also mentioned at length with examples of the daily open in the top-down video. So if this doesn't make sense to you, I'm not just being sort of blasé about it. I've covered it at length elsewhere. So entry, usual shite. And then target is either, well, usual shite. So, for example, if you're trend trading, you might want to hold that until a shorter-term moving average is lost. You might have an Alt BTC or Alt ETH level that you want to target. It might be a nice round number confluence meme that you're targeting. It might be that you're trading this altcoin for a trending move, but you're going to sell everything when BTC and ETH hit a large level of resistance. So, again, some of the stuff that we mentioned at the very beginning also works for targets. Because just like there is no obvious support to buy when you have a lockout altcoin trend, there's no obvious resistance to sell when you have an altcoin trend. Because, again, there are just no levels to work with. So the tools that we mentioned for finding levels at the beginning of the video also apply to setting targets when you're in the trade. So that's the daily open for dummies, essentially. Again, this only works if contextually you're correct about the market and you have a good reason to be bullish and the market doesn't give you a pullback. But it's better than nothing. And it's better than nothing specifically because of point number 4. It gives you an invalidation. So you're not just like, okay, well, this is a big move and I think it's going to go up, so I'm just going to buy and hope. And then it starts drifting down and you don't know what to do. The benefit of this, and unlike trading those levels, which don't give you retests or don't give you structure, is that you finally get an invalidation. While it may feel like you're buying in the middle of nowhere, it's not as bad because you know where you're wrong if you're correct about your read on the trending day and subsequent trending days, right? So what that might look like, we've mapped the daily open. We're looking for a strong drive below, ideally in the early hours, but this can work quite liberally and you can exercise your discretion when it comes to when or what causes the drive. You have a drive below the daily open. Ideally, some evidence of absorption or a spike or a failed breakout or BTC and ETH hitting support, again, all the stuff we mentioned. And then eventually you want to see a reclaim of that daily open. And when that happens, the low of the day, because again, the thesis here is basically the day is going to be green. And if the day is going to be green, then you're essentially arguing that, hey, this move below the daily open is the wick of what's going to be a green candle. When it's above the daily open, the candle turns from red to green, right? And then at that point, you're essentially arguing this is the wick portion of the candle. We're above the daily open where it's green, and now I'm trying to catch the body portion of the candle and the subsequent expansion. So it's essentially trading the high time frame candle, specifically in this context, the daily candle, as it's forming. That's the guess we're making. And that's really all it comes down to. Again, this is a very simple setup. The reason a lot of people mess it up is because they apply it without context. They'll just map the daily open and just try to use it as support resistance. Like, oh, look, it's a retest, or, it's a retest here, there, whatever. But in the appropriate context, it's a pretty powerful setup. It's just that people mess up the context portion of it and less so the execution, because that's quite hard to get wrong. There are nuances attached to this, which I'll try to cover in the cred video. Like, how big should the drive be? What if you get a drive and then resistance, and then another spike type of thing. But the basic outline is as straightforward as it seems. You want a drive. If you're right that that's going to be the wick, the entry trigger is typically on the reclaim of the daily open. The low of the day becomes your invalidation if the day is going to be green. It flips green above the daily open, so that's sort of an acceptance above it and a retest or a close usually on the sort of 5-minute to hourly. So it tends to be a sweet spot, depending, that's something for you to investigate, test, and find out. And then we have a view as to how the daily candle is forming. If you're right, this is the wick, this is the color flip, and then you're entering above the daily open at that point when there's evidence that it's turned from resistance to support, and you're trying to catch the green body of a future candle, or of the candle of the same day that you're trading. So again, the context is most important. You need to have a very strong reason to believe that there's going to be a trending day or trending days. We're looking for an invalidation. The drive gets our attention. The reclaim of the daily open and subsequent acceptance of some form is our entry trigger. The low of the day is the invalidation, and the target, as we discussed, no one has any targets at that point, so we're essentially going to use the same techniques that we started the video with, be that BTC ETH levels, altcoin ETH levels, moving averages, lost, gained, so on and so forth. That's all I've got. Let me know if this video was helpful. Leave a like on it if you want to see more educational stuff on altcoins when the market is a bit boring and shitty. And that's all from me. See you for Casual Friday tomorrow, and I look forward to reading your comments. Goodbye.